Hello traders, in this module we're going to be walking through Thursdays and the understanding of simplicity. The most important thing that I can emphasize in this module is simplicity and rinse and repeat. One of the things that I don't want traders to get carried away in is trying to find this trade every single day everywhere in the market and have too much information in their head and making it very complicated. Already people are misinterpreting just simple things about 3 days of breakouts, but we're going to go over the daily charts. And I really want to reinforce simple rinse and repeat, hunting out the same setup on any market over and over and over again. Now, I've told my sons Thursday is the only day they're going to look for this trade. And in my experience, it has the highest probability of when it presents. Now, I like to use the sort of simple understanding of week 1, week 2, week 3, week 4, starting out the month non-farm payrolls. And when a month starts, we're either breaking out of a new monthly high, monthly low, or we're inside of the range. And if we're inside of the range, a market is potentially breaking down and heading the other way, or it is putting in one of the extremes into the new month, a new low close of the month or a new high close of the month, inside of the range, inside of the previous monthly range. Now, ain't coming back is the setup that we're looking for, because once we enter into that coil, it's simple. There's a setup, we have 3 closes and breakout. Now, this is an example that we'll go through. I had a question regarding this type of setup. When a market breaks out, it's the first day of the count. It's the first day of the count. So when a market breaks out and closes in breakout, some traders are confusing that it has to be in breakout again the next day. And you'll notice in this particular example, the market is in consolidation for the following day. It is still in breakout. It broke out of Friday's high of day level. Sometimes the market may continue to close in breakout the following day, as we saw on copper on Friday. So we had the first day closing in breakout, the second day closing in breakout, and the third day closing in breakout. But once this market breaks out, even if it trades sideways, it's still in breakout. And different markets, different conditions are going to show different types of patterns. And if we back this up in a moment, we're going to look at the daily chart, and we have our third close and breakout, and this is the highest closing price of the week. But we have a market that breaks out on Monday, trades sideways into Wednesday, but we're still in breakout, and we're now going to break out of Thursday's high of day level. So don't confuse that it has to successively break out. Day 1, day 2, day 3, high closing price of the week heading into Thursday. Now, I also want to shake people's thought process about catching highs and catching lows. This is inside of a previous month's level. The market opens up inside week 1 and trades lower inside of the previous monthly high and low range. We're inside of a previous monthly range. We're not worried about catching the high or catching the low. Where is the setup? Week 1. Week 2 continues to trade lower and breaks a low of month level heading into the new week. And we have our market on Monday, new week, new timing cycle, closing in breakout. Now, even if this is a down closing day inside of the range, we are still in breakout. Monday, Tuesday, Wednesday closing as the high closing price of the week. And you'll notice in this particular instance, the way that this market has set up, this is a stop hunt back up inside of the range. And how does price behave when we come into our Thursday session? So when my sons come to the screen, they're looking for Wednesday that closes in breakout. What type of setup do we have within that daily time frame template? How does price set up on the day? It's as simple as that. We're not worried about trying to have the high of the month or the low of the month every Wednesday's closing price. It has nothing to do with that. Does the template set up for an ACB trade setup? As we just saw, we saw a market break out of a monthly level, stop hunt back up inside of a falling market week 1, week 2, week 3 stop hunting back up inside into our Monday, Tuesday, Wednesday template, an ACB trading setup on Thursday. Now the goal is to find these type of templates on any market on a weekly basis. Now, as I've told my sons, they're looking on a Thursday. So they need to try and find this template in a market that's closed in breakout on any Wednesday's close. And then how does it set up into the Thursday session for the New York window? Now, obviously, we're going to find these templates setting up as different markets trade differently heading into new months. We can have markets break out on the first week of a month. We can have markets break out on the second week of a month. We can have markets not break out at all and offer a one-day breakout reversal setup. Now, before we go further, I want to emphasize something that's really, really important. Linda Bradford Rashi's quote, "All you need is one pattern to make a living." These templates are designed with a specific agenda when they present. They wipe out an entire day or an entire week in some cases, and they're not coming back. When you understand the power of that particular setup in itself, zero stress, zero emotion, zero thinking, zero management, and scalable in size, you'll sit on your hands and wait for these types of setups rather than trying to get trades every day. And we're going to dive deeper into that in the psychology section, because the behavior and the mindset and the beliefs of the trader is usually the number one reason why traders will never ever scale their size up. They'll never be consistent, and they'll continue to go through the cycle of winning some, losing some, and blowing up their trading account. Now, as I've told you in the earlier part of the video, my sons are only trading on Thursday. They're looking for Monday, Tuesday, Wednesday, close, high close of the month, low close of the month or week for the ACB Monkey Hammer template. Rinse and repeat means to find the same setup, same day in their case, over and over again in any market, and not doing anything else that can damage their winning results. Now, I want you to think about this. If they only trade that setup 2 or 3 times a month for the next few years, how successful do you think they'll be when there's zero emotion in this trade? There's the entry, there's the stop, and then this is where I will go to break even, and this is where and when I will take profits. It's a hold till close trade setup. There's zero stress because the trade is moving into profit almost immediately after entering into the setup. The coil, zero thinking, zero management, because there's nothing a trader can do with this trade except damage it by thinking about where they need to get in or get out again, and it's a zero management trade setup. It's not coming back. So once they take the position, put their stop in place, and if they move to break even, once it breaks a level, there is nothing else to be done. This setup is not the same as other days that trade in markets, that auction back and forth. So stepping back and understanding the power of that template and hunting out the same setup. Thursday has a particular higher probability of succeeding all the way to the close. Now, yes, we are going to see these setups in other places, particularly front side of new months, especially if they break out or they're breaking out of other monthly high-low ranges. But their job is to find markets that close in breakout on Wednesday as the highest or lowest closing price of the week or month, and have we had 3 days of breakouts in the market. It doesn't have to be 3 successive days closing in breakout, because a market will break out sometimes of ranges and do that, or it may stop hunt back inside of a range with 3 successive bursts, or it may break out and consolidate for a reversal trade, a one-day reversal, or an explosive trend trade, which we'll look at as an example as well. But I want to emphasize, rinse and repeat means to find the same setup, the same day in their particular case, on any instrument over and over and over again and doing nothing else in between. This setup is scalable in size. Size is where you will make the highest amount of money on this type of template. Scaling in once your skills and your confidence grows, and understanding that there is nothing else to do with this setup because it is going to the close of the day. Now, sometimes the economic calendar will impact how these templates will play out and the timings of when they may unfold. And this is a scenario where, as I talked about with my sons, if CPI or any other high impact news is on a Thursday, then I will tell them to disregard that setup for now. Now, as we can see, this template played out later into the day itself after 3 closes in breakout, putting the high close of week in place. And this is on the front side of a new month. And as we follow that month across, we can see that month continue to break down into the last few weeks of the month. And we'll look at the daily chart in a moment, because today I really want to reinforce to traders simplicity of reproducing, rinse and repeat. Thursdays, breaking out, 3 days of breakout, day 1, day 2, day 3, high close of the month or high close of the week in a new month. And has that market broken any monthly levels? Or are we working back inside of a previous month? Stop hunting back into a market that has traded either down or up. So if we haven't broken any monthly levels, is the new month starting to put an extreme in place inside of the previous month's range? Week 1, non-farm payrolls. Week 2, CPI. Do we have our 1, 2, 3 template? Is there any major red news on the calendar? Now, for traders who have more experience and they understand that CPI now potentially has been a factor in this potential setup, which is not that common on a Thursday, but we see a zooming in here. This is an hourly chart again, a 1, 2, 3 higher closes in breakout. So reinforcing that once this market closes in breakout, the count starts. 1, 2, 3, regardless if it goes into consolidation, that turns into a first red hour at the highest closing price of the week. And we have our collapse into the close and the low of the day level. Now, my sons aren't going to be trading this. Why? Because that's not the normal day. We have CPI on the day. That's not normal. I don't want them thinking. I don't want them analyzing. I don't want them trying to figure out anything. I want the 1, 2, 3 sideways coil, entry, stop loss, hold to a close trade setup. That's simple, repeatable, and scalable in size. Obviously, this trade still played out, but the timing of when that unfolded and the understanding of how that market broke down on CPI and then proceeded to trade back up into the high of the day is outside of the normal timing window and a different scenario. I don't want them trying to trade this or getting in or anything else. I want normal on a normal day where no major red news is in place. As their skill set and their understanding grows, this is still an optimal opportunity, understanding that this market now is on a different timing rotation and they're coming back up into the high close of the month level after CPI has been released. So one of the exercises that I repeat to traders to walk through so you really can cement your understanding of when a market breaks out or if it's trading inside of the range. Week 1, we have non-farm payrolls, majority of first Friday in a new month. We have CPI, we have FOMC, we have other major red news on the calendar, but more importantly, tracking instruments once they close in breakout. And not confusing that the market has to continue to close successively in breakout. There are different types of setups and scenarios. And then if you want to stick with simplicity, focus on the Thursday setup, because that will increase your odds of success. If you're constantly trying to look for a reversal once a market closes in breakout, you'll still be chasing movement and not the setup. And the setup is Monday, Tuesday, Wednesday, close in breakout, highest closing price of the month or the week. And it's not about trying to catch the high. The market may not be set up for a reversal. It may fulfill that template, but we're looking for the ACB setup where a Wednesday closes and breakout, and it can be back inside of a previous monthly range, as we just saw in the NASDAQ, a stop hunt. We're looking for markets that are going to break out, and they can be trending markets, as we saw in copper, or we can be inside of a range. But once that market closes and breakout, the weekly template is Monday, Tuesday, Wednesday, closing and breakout. Thursday reversal. That's the simple basic model. Outside of that, if you're looking for a reversal on different days, you may not have the same setup that you think you have that you get on a Monday, Tuesday, Wednesday. And sometimes you're going to have markets that you think are going to set up, and lo and behold, they may form into a different scenario. This is where first red day, first green day trades come from. We have a market that is at the high of the month, closing as the high closing price of the month on a Tuesday. It breaks down into a first red day heading into the backside of a week. Now, this is not what we're talking about. And yes, this is where the playbook, the first playbook came into play, because there are first red day, first green day trades at high and low levels, high closing prices of the month and low closing prices of the month. This is not the setup that I'm looking for. These are trades, but this is not the setup that I'm teaching my sons. We're looking for Monday, Tuesday, Wednesday, Thursday reversal, and in some cases can be a Thursday trend trade. And this is an example of a trend trade. Same template, but in the trending direction. We have a market that broke the low of month level on the very first trading day of the month and closed in breakout of a previous weekly level. If we mark that off and come into our Friday close, we closed in breakout. Monday continued to break out, closed in breakout. Stayed in breakout on Tuesday and closed in breakout again on Wednesday. How does price set up on the day? We go to our basic model for trade entry, our coil. We're looking for our coil. Remember, markets do three things. They break out, they pull back, and they trend. They break out, they pull back, and fail and reverse, which is our template, our ACB template, or they stay range bound. They break out and they stay range bound in a consolidated market. So most importantly, how does price behave on the day? We have two types of scenarios. We have our reversal coil and we have a trend trade coil. So we have our simple model. It's Thursday. Wednesday closed in breakout as the highest closing price of the month. We have major red news at 8:30. This is the Dow Jones 30. New York Open is at 9:30 a.m. We have our coil sideways on top of the breakout. On top of the breakout, underneath of closing price, heading right into our 9:30 a.m. New York Open. Now, simplicity is the coil. Taking a position in the markets, 9:30 a.m. New York time, anywhere underneath of closing price. Putting our stop loss at the extreme. There's no major red news into the New York window. And walking away. We have our coil. We have our three closes and breakout, and we'll look at the daily chart in a moment. We're reversing inside of a range, and we have our ACB template. When the market breaks through the high of day level, moving our position to break even, and walking away. Coming back and closing that trade either into the close of the day itself. Traders want to leave a trailer, as I've mentioned, if they have the confidence or the understanding that that position may continue to run into the new day. That's up to them to let that position run. As I've told my sons, they're going to close these trades out within the last hour of the day and exit the position. Now, if we come back to our daily chart and look where we were at, our Wednesday closing price was the highest closing price of the week, but we had a market that coiled sideways in our 5-minute coil into the New York Open for a parabolic explosive trend trade. And that's an ACB template in a market that's reversing inside of a previous monthly range. So this is where I keep reinforcing to traders, it's not about catching highs or catching lows. It's about the setup and the template on the day. We had a market that closed in breakout Monday, Tuesday, Wednesday, coiled sideways into our New York Open. Is it a trend trade setup or a reversal trade setup? Now, a lot of these setups, the majority are going to be reversal opportunities, but this was a 5-star all-in scalable trend trade setup in a market that closed in breakout in a reversal setup back inside of a monthly range. And in simple terms, if we follow these markets across, again, understanding that when we trade back up into monthly extremes, why we can see markets change on a new week, a new timing cycle. Friday puts the highest closing price of the week in place, and we have a first red day reversal scenario heading into our new week, a Monday, Tuesday, Wednesday, Thursday collapse back into our breakout. So study your daily charts. Understand that when the new month starts, are you inside or outside? If you're inside, is the market working to establish a new extreme inside, or is it on a new reversal back to the other side of a range? No false break in this particular case. We had a market that traded down, put a low closing price of the month in place. It broke out in the first week. Week 1, week 2, 1, 2, 3, closes in breakout, coiled sideways. A beautiful explosive continuation trade in a market that was reversing the previous monthly range. So study your daily charts. The simple model in closing in this particular module, I will say this, the simple basic model, and what I am only teaching my sons, is to look for 3 higher closes, 3 lower closes in breakout, closing on Wednesday as the highest or lowest closing price of the month or week. And then how does price set up sideways into that coil in the session that you're trading? There's either a coil or there's no trade at all. Keep it simple, rinse and repeat, and that is where you can scale those setups in size. We'll see you in the next module, traders.